Hello and welcome to BCR. Let's get your trading day started with the following financial news and market headlines.
Last week, the US dollar index closed lower on 4 out of 5 trading days, reaching a low of 104.08, the lowest point in over a month. Despite generally weakening US economic data, import prices exceeded expectations, and the US economy continued to show strong growth in the second quarter, which directly influenced the cautious stance of Federal Reserve officials. Additionally, hawkish remarks from Fed officials seem to have bolstered the dollar by signaling a reluctance to implement rate cuts, thereby limiting its downward potential and maintaining a neutral stance in the short term. US Treasury securities actually rebounded along with the dollar. Last week, gold prices rose despite the benchmark 10-year U.S. Treasury yield stabilizing around 4.4%. A cautious market stance supported gold into the weekend, breaking through $2,400 to a multi-month high of $2,422.80. This surge was bolstered by positive data from China, brightening the outlook for the world's largest gold market. Gold prices had been rising since Wednesday when U.S. inflation data showed cooling and U.S. retail sales appeared weak, suggesting that the Fed might be closer to cutting rates than previously expected. The anticipation of lower interest rates increased the appeal of non-yielding gold to investors. Last week, positive economic indicators from the world's two largest oil-consuming countries and an increase in travel over the long weekend in North America led to heightened expectations for oil demand. As a result, WTI crude oil prices rose, marking the third weekly gain in 4 weeks, with a 2.13% increase to $79.37. The recovery in the oil market led to a price increase in the latter part of last week, though prices are still consolidating at recent levels. Support for U.S. crude oil was bolstered by a decline in U.S. crude inventories as reported by the U.S. EIA and the API, which further fed into a buyout market sentiment following the release of U.S. consumer data.
We hope you enjoyed today's market outlook. If you have any questions or topics you'd like us to cover, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news and